Major funding for this program was provided by the Central Educational Network, the Corporation for Public Broadcasting, Friends of Iowa Public Television, and this and other public television stations.
In Washington, the latest word on the weather.
I think it's a much improved situation that we're looking at over just a month and a half ago in many areas of the country.
And in the country, casting a line into a natural enterprise.
So it's a very fluid and dynamic market, and it's ever-changing. It's always changing.
The prospects for trout, drought, and more coming up next.
This is the Friday, April 28 edition of Market to Market, the weekly journal of America's largest industry.
Hello, I'm Chet Randolph. The U.S. economy saw a vigorous expansion during the first quarter of the year, and economists say the reason is the recovery in farm country. Outside of the farm sector, the economy actually slowed from its previous quarterly pace, but because farm production was returned to normal following last summer's drought, the economy in early 1989 grew at a robust annual rate of 5.5%. Even so, a poll of upper Midwestern bankers shows the bankers feel the impact of the drought of '88 is yet to come. The poll conducted by the Norwest Corporation finds the bankers predicting lower farm earnings in the region this year from the drought-shortened '88 crop. And like many of their brethren elsewhere in farm country, they're more than a little concerned about the prospects for drought this year.
More rain and a slim chance of drought for most of the country. That's the prediction of the USDA's chief meteorologist, Norton Stroman. Stroman told members of the House Agriculture Committee this week that weather conditions across the country are returning to normal.
I think it's a much improved situation that we're looking at over just a month and a half ago in many areas of the country. It looks like we're ready to change the spring pattern, which is always an important part of the spring weather. And if that goes to maturity, I'm encouraged by what I see developing.
What's not encouraging, though, is the Kansas winter wheat crop. Farmers there predict that they have lost at least 25% of their crop, and much of what remains is getting a much later start, which could cause problems later.
If we think in terms of the cold late start of our growing season, it means that the crop has a bigger window in which to respond in terms of winter wheat. But it also means that you push the crop further into the summer period where you would normally have the more stressful weather patterns.
Nevertheless, Stroman says there has been a substantial recovery in most parts of the U.S. And he says if weather patterns continue, farmers could still produce a large crop. But for that to happen, Stroman says the rain must come at just the right time. That's because early rains were followed by a frost this year, and that, he says, kept the moisture in the topsoil.
That's enough moisture to germinate and establish the crop in essentially all areas at this point. That simply means that the summer crops will depend on the timing distribution of the summer rainfall. We don't have the cushion of having the luxury of the full soil moisture profile filled. The bottom part is dry.
Meanwhile, Agriculture Secretary Clayton Yiter announced Wednesday that he has approved several drought relief measures. The programs would be similar to last year's drought relief package and include allowing farmers in counties meeting USDA's loss eligibility standards to graze livestock and cut hay on land idle under price support programs, and permitting livestock producers to buy grain owned by the government's Commodity Credit Corporation at half price. Yiter has also set up a drought task force to monitor drought conditions and make recommendations for further action if needed.
State governments are taking preventative measures against drought as well. The Iowa Senate this week approved a plan that would allow farmers forced to sell cattle because of drought conditions to spread out income over 4 years. That, of course, would soften the bite from state income taxes. The bill's sponsors say many cattle producers already are considering selling off foundation herds as hay becomes more scarce and feed costs rise.
In the boardroom, once bitten, twice burned. A spokesman for the New Jersey-based Chubb Corporation says the company will not offer drought insurance to farmers in 1989. A subsidiary of the company sold about $350 million in drought insurance that Chubb refused to honor last summer. Farmers in 10 states who bought the drought policy sued the company, which recently agreed to a $46 million settlement of the case.
Agriculture Secretary Clayton Yider says the USDA expects to send a new farm bill proposal to Congress before the end of the year. Yider says Congress has indicated it would like to have a Bush administration plan that would move the U.S. toward a more market-oriented farm policy. But one of the programs forced on the Reagan administration by the current farm bill is the Export Enhancement Program, which offers government commodities as bonuses for overseas sales. And this week it was standing room only when a House Agriculture Subcommittee tried to pin down what the administration's position is on the Export Enhancement Program.
The EEP, as it's called, has been a mainstay of U.S. export policy in recent years, designed to challenge unfair trade practices, maintain the U.S. competitive position in the world market, and put pressure on the GATT negotiations. And to date, more than $8 billion worth of farm products have been sold under the program, the lion's share of that wheat. The problem is there have been no new sales under the EEP since February. In recent weeks, there have been conflicting statements from the administration regarding the status of the EEP. And questions have been raised regarding who controls the program, the USDA or the Office of Management and Budget. It was against that backdrop that some unhappy members of a congressional subcommittee looked for some answers from the administration. The problem was there was no representative from the Office of Management and Budget, and the new Undersecretary for International Affairs and Commodity Programs at the USDA, Richard Crowder, couldn't tell some committee members what they wanted to hear.
Despite assurances to the contrary by President Bush, Agriculture Secretary Yider, and other administration officials, the Export Enhancement Program has been frozen or delayed. And it's been frozen or delayed by the diaper-clad bean counters down at the Office of Management and Budget, and there is an intent to either cancel the program or entirely to adopt a much less vigorous use of the program in the future.
I reread your statement twice now, and I failed to find any comment therein about the status right now of proposals that are before you for the EEP program in light of what OMB has said.
Now, I guess I would ask this basic question. Is Mr. Yider and the department running the program, or is it some sort of consensus program where any one element within a large federal bureaucracy has the authority to stop it?
Crowder, who had only been on the job at USDA 1 week, did not really allay the committee's concerns. He declined to respond to questions regarding an interagency meeting the previous day about the EEP and said it was inappropriate to discuss any specific bonus proposals.
It's better to judge the success and management of the program over a period of time rather than over a 60 to 90 day period in terms of which a management team is changing.
That, though, didn't answer some members' questions, and the absence of a representative of OMB was felt keenly. Indeed, Chairman Glickman said if OMB was not forthcoming with information, the subcommittee would issue a subpoena. The bottom line? Well, the administration's statements were for the most part perceived as vague and inconclusive, and that the basic issue of the future of the EEP went begging.
The other question hanging over the program this week was whether the administration would offer the bonus to the Soviet Union. Russian trade representatives were in Washington for consultations on the long-term grain agreement. The two-day meeting concluded Friday with an agreement that allows the Soviets to buy up to 24 million metric tons of U.S. corn and wheat during this year of the agreement. Current purchases total 17.4 million tons. But at week's end, there was no word on whether the White House would offer the Soviets export bonuses.
On the horizon, reform hits the pits. The commission which oversees Chicago's futures markets has come up with a list of recommendations to tighten control of commodity floor trading practices. Among other things, the Commodity Futures Trading Commission wants to register floor traders and more accurately define the term commodity broker. The recommendations are in response to alleged abuses at the Chicago markets, which were uncovered during a 2-year federal investigation.
Common market agriculture ministers have agreed on another year of austerity for European farmers. This week they agreed to freeze most prices to keep the EC's farm budget at just over $33 billion. Also in Europe this week, progress was made on the trade dispute over the EC's ban on imports of U.S. beef treated with growth hormones. Apparently the U.S. has agreed that beef exported to Europe be certified as hormone-free. Elsewhere in farm country, there are meat producers who are doing quite well with the resources they have at hand.
The Mississippi Delta country, once the land of cotton, later soybeans and rice, today nurtures another crop that is changing the Delta economy. Pond-raised catfish are generating dollars that were unheard of in rural Mississippi. Unlike other crops that are shipped away for processing, catfish are raised, processed, and packaged locally, employing thousands. And while the decade of the 80s was a period of contraction for much of American agriculture, for the catfish industry, the 80s featured tremendous growth. In the Southland, the catfish are definitely jumping.
Well, catfish may be the high-profile example of successful aquaculture ventures in the U.S., but catfish farmers certainly aren't the only others in American aquaculture looking at profits. Indeed, as Sid Sprecher reports, the trout industry in the American Northwest is poised to make the most of a natural enterprise.
The snowpack of Idaho's mountains is a source of ample water. Some of the snowmelt finds its way to rivers that literally flow beneath the face of the earth, disappearing under the desert lava fields of southern Idaho. 100 miles to the south, the water gushes from the cliffs above the Snake River, flowing pure at a constant 58 degrees. The purity and abundance of the water is tapped by the trout producers of Idaho. They combine it with technology to produce one of the more novel and profitable enterprises in American agriculture. Hatched indoors under artificial conditions, the fry feed, grow, and are moved through a succession of cement troughs of continuously flowing water called raceways. 10 months later, ready for slaughter, the fish will weigh 2,000 times their weight when hatched. They will have gained a pound for every pound and a half they've eaten. 4 major producer-processors, along with 65 other producers who raise the fish on contract, account for nearly 90% of U.S. trout raised for consumption, nearly 40 million pounds of the fish annually. Processing of the fish employs over 1,000 in a sparsely populated area. The workers and the latest machinery move the fish to major markets all across the nation. About 60% of the Idaho production is sold as fresh, about 40% is sold as frozen. Even so, the Idaho trout industry is still small fry compared to the total seafood market. Trout production is a mere sliver compared to that of the catfish industry. Indeed, the nation's total aquaculture output is less than its recreational catch, far less than the ocean catch and imported seafood.
The seafood segment of protein represents in 1987 15.4 pounds per capita consumption. It's quite small when you compare it to the rest of animal protein.
Larry Cope is president of Clear Springs Trout, a state-of-the-art company that produces nearly half of Idaho's commercial output. His competition includes not only red meat and poultry, but as many as 80 different species of fish either netted by U.S. fishermen or imported from other parts of the world.
So it's a very fluid and dynamic market, and it's ever-changing. It's always changing.
But in that competitive environment, Clear Springs and the other trout producers have grown steadily. And though small, the industry is on the cutting edge of both trends and challenges in food production. For example, there are few in American food production who've tolerated the demands of the Environmental Protection Agency the way trout operators have.
As always, when EPA first came in, everybody complained that it shouldn't be regulated, it's too much expense and all of this. But they forced us to clean up our facilities, and as we cleaned those facilities up, we found we could raise more fish.
Leo Ray is one of the state's more innovative producers, a native Oklahoman who first started a catfish farm in California. This year he will raise 2.5 million pounds of trout. And by combining the water from the aquifer and geothermal water to raise the temperature, he will produce about 900,000 pounds of catfish that will command a premium price at the marketplace.
We have a firmer flesh, better, just overall better control of the product, and end up with a better flavor. The off-flavor problem, which plagues the catfish industry in the South, we don't have up here in the raceways. You just don't find better water anywhere in the world to raise fish than what we have here.
With a reverence for water quality and applied technology, the Idaho industry continues to be homegrown. In an era of federal budget cutbacks, it's likely much of agri-industry will have to, as the trout producers have done, finance their own research and development.
But we're not a large animal industry when you compare us to the beef people or the poultry or dairy or whatever. Because of that, we did not enjoy a lot of research dollars through the federal government in the initial years. So we took a look at it as a company. Several years ago, there were some things that we wanted to accomplish with our company, which required a fairly substantial commitment for research.
Evidence of the Clear Springs commitment is an extensive research facility that is perhaps the best of its kind in the nation. The investment, though, is paying dividends.
It's been interesting how that has developed, because since we developed our research station and our staff, now we are much more readily able to interface with the public sector, with USDA through the academic institutions, the land grant colleges, with research where we can work jointly with them, because we have probably the best facilities available in the country today with a very qualified staff.
To be sure, the industry has a handle on efficient production, but like much of the rest of agriculture, it faces a challenge of marketing. Historically, trout producers have chosen to produce only to accommodate existing demand rather than develop a larger market. Today, leaders are considering how to put together an effort to sell their product as their farming neighbors have sold the Idaho potato.
Too much of our sales has been simply by word of mouth, and this leads to growth, but not a rapid growth.
During the same period, the trout industry's output was growing to 40 million pounds annually. The production of catfish grew to 10 times that amount, fueling demand as the swelling production literally pushed catfish onto American plates.
But probably it would require a philosophical change on the part of some producers, because they're still very much production-oriented, and it's difficult for a lot of people to look at their operations and to convince themselves that you have to invest so many dollars into developing your markets.
But the trout industry would seem to be in an enviable position. Rising consumer demand for a protein source low in fat is easily filled by Idaho-raised trout, and the consumption of fish grown through aquaculture has risen steadily.
I just have to ask myself, well, where's this product going to come from? It doesn't appear it's going to come from the oceans. And so because of that, I think the future does bode well for aquaculture.
Coming up next, the market-to-market report. In the pits, some damp and gloomy bulls.
Well, rains in the U.S. and good harvest weather in Brazil caused soybeans to drop back 38 cents. Russian buying of corn limited the decline there to 6 cents for the week. With a big move up on May futures in Chicago Friday, it made wheat prices that we track 3 cents higher for the week. Now, hog futures prices rallied from their lows to close $1 higher than last Friday. Cattle prices made new lows during the week, but they managed to close at the same level as a week ago. The German mark was more than 100 points lower, while gold broke down through support to make new lows, $7.50 lower than a week ago. Not surprisingly, the Commodity Research Bureau's index of commodities dove more than 6.5 points on the week. Here now to lend us their insight to these and other market trends are two of our analysts, Jerry Walters and Sue Martin. Welcome. Jerry, with that outlook on beans, what is there that might rally the price?
Well, Chet, weather's still going to be the dominant factor in the bean market, and I think any significant rallies that will come in beans will come as a result of dry weather expectations. However, until we get the crop in the ground and we get further into the planting season here, the market's going to remain a trading affair. It's still going to be technically
difficult.
It's going to be extremely difficult. And I think that we're going to be in a situation then where we're going to have to get into oversold conditions before we're going to see any major rallies.
And let me ask Sue, do you see anything else that might give us a rally there on beans?
Just primarily, I think if South America continues to have problems with these dock strikes, having ruled, the government ruled or the courts ruled that they were illegal, and consequently, if they continue to have problems with the credit union or the unions down there, I think we'll have some help towards the old crop maybe being stronger.
Well, now the farmers in Brazil haven't sold much yet, have they?
No, they haven't, and that's been kind of a surprise. I think a lot of people thought that they would. A lot of traders had anticipated that they would, that the farmers down there would need money, and with the devaluation of the dollar down there and everything, I think they thought that they would.
How low do you think that new crop beans might go? Naturally, weather is a question mark, but what are you telling your customers if they don't take advantage of this? How low could they go?
Well, Chet, I think that the new crop beans, it's early yet, so therefore I think from here on out, they're going to start to grind their way lower. Last week we seen them as the weaker option in the bean complex, but I think from here on out they'll grind their way lower, being a victim of weather if we have rains. And you know, it's a varying opinion amongst weather forecasters as to how much rain we're going to have over the next 2 weeks.
Are you talking about $6.50 or $6 on the downside eventually, or what?
I think we could see that. I think that $6.75 to maybe $6.50 is not out of line, but that might come more as we get into July.
Okay, and Jerry, how much down do you see on the new crop?
I think new crop beans could move down in the $6.75 area also, Chet. We're in a situation right now, as indicated, that we are getting oversold, but I think that the market's going to find some support down in there. Even $6.90 is going to find some level of support in the new crop beans, and we could see a little rally from that.
But it is going to be tough to see a rally until we get really dry weather again, isn't it?
Yeah, I think weather is certainly going to be the primary factor there.
And what about on the wheat? Do you have parameters there for us technically?
Well, when you take a look at July wheat, we could rally, especially after the reversal today, up into the 410, possibly into the 420 area. On July wheat at 410, we're going to run into a lot of resistance. And if we get a situation to where the market starts to settle back, we are getting, by the way, into an overbought situation in the wheat, settled back, we should hold at 390. And I would think the trading range is going to be between 390 and 410.
Sue, we've seen a lot of good Russian buying in the corn, and in fact we're getting close to record buying there, but generally when that runs out then we don't have many other buyers. Do you see corn slipping just because we're going to run out of Russian buying here?
I do. Basically the rains that we've gotten have pretty much just allowed us to germinate the crop and get us started, and then from there we're going to need timely rains to keep us going. But because of the on and off demand that we seem to be seeing, I think that we could still slip the corn market a little bit lower. I think a lot of the rain's in the market, and now they're looking at next week with dry weather, and so that could turn around and lead us up early next week. But I think this market's going to grind its way back lower again.
When you say a little lower, Sue, what do you mean?
I think that May corn, or let's take July corn, I think down around the 262 area to 265 should be supportive. Resistance on the higher side, I would have to say, is 275 to 280.
Not much up there.
That's right. And I think new crop corn, if you get the new crop corn around the 255 to the 250 area, that 250 is kind of a supportive area to me, and psychological. And I think that that could be supportive also.
Jerry, do you see demand coming from anywhere? We certainly haven't had much going in the export sales business on any commodity except this Russian buying of corn right now. But do we have much demand coming in the next couple of months that you can see?
I'm not optimistic. We're ahead right now in our shipments and our exports of corn, especially for the year. Beans, of course, we're slow, and we're going to have to see some pickup there. The thing that concerns me is that typically we're coming into a time of the year to where we don't start seeing an acceleration of those exports, and I think that could pose a problem for us down the road.
Switching over to the hogs, Sue, we keep seeing more hogs come in, don't we, just this week again. What do you see in the hogs? I know we've had a little rally, but is that about it?
I think that the traders on the floor right now are still a little bit negatively poised. I think that we have a tendency to see, heavy weights yet on hogs, and the slaughter's still high. And since we have had rain, I think that's going to kind of squelch some of the calms, or the fears I should say, on the price of corn going higher and maybe causing more of a liquidation.
Well, now, do you see any reason to hedge on the hogs, or do you think that we've got a little more rally before we want to do that?
Actually, I think we have a little more rally before we would want to do that. I see that June hogs might get down to around the $45 level, and the higher side being around 48, 47.5 to 48. A lot of these markets...
Pardon me, which month was that?
June
okay.
hogs. A lot of these markets seem to be in trading ranges right now, and it makes it difficult for trading, but that's really what they are in.
Yeah, okay, and Jerry, do you want to tackle the cattle side? What do you see?
Cattle right now, Chet, I think are in a very good position for a rally. I would look for June futures to hold very well in here at this $70 area. I think one of the most positive things in the cattle market right now comes from the standpoint that we have a premium of cash over futures.
By quite a bit, don't we?
By quite a bit. And I think what this is having a tendency to do is it's bringing cattle, which we were anticipating a real glut of cattle into late spring and early summer, and it's bringing some of those cattle ahead. And it's bringing us into a situation to where it's very, very beneficial for producers right now to market those cattle as they're ready to come to market. And I think that's bringing us lighter weight cattle and also pulling some of those cattle ahead, which should help us keep the market together. Technically, the June futures are in a very oversold situation. We're down at a level right now where even on the weekly longer-term charts, we're very oversold. And I would expect the June cattle, especially after today's close, to rally back up into the $72.5 to $73 area. And if the cash will firm and hold together well with that premium, could lead the futures even up into the $74 to $75 area.
And you tend to think that the cash will firm?
I think the cash will stay firm. I think that right now we're in a situation where the packers have good margins and they'll continue to feature the beef.
Let's take 30 seconds on this gold going to new lows and the CRB index taking a plunge. What's that tell us?
Well, Chad, I think it's an indication that inflation is really not a major concern right now. I think that the gold market right now, if we're looking at it as a strong indicator of inflation, it may not be so much so as what it has been in the past. But I think what it's basically saying is that we don't have to be overly concerned with inflation at this point in time.
Sue, in a few seconds, does it mean that interest rates might be coming down, at least not going up?
I think they could. I think that we could see interest rates drop a little bit more.
Okay, fine. Thank you very much, Jerry and Sue, and that wraps up this edition of Market to Market. Join us again next week when we'll take a look at a long-running success story, the St. Paul Bank for Cooperatives. Till then, I'm Chet Randolph. Thanks for joining us, and have a good week.
For its content. Major funding for this program was provided by the Central Educational Network, the Corporation for Public Broadcasting, Friends of Iowa Public Television, and this and other public television stations.